Today's Talk About It Tuesday question is, if Africa were to establish a resource-backed currency such as gold, platinum, cobalt, etc., how would this currency affect our economy and ultimately our investments? All right, so I think this needs a lot of explanation in order to understand my answer. So the question says, if Africa were to establish a resource-backed currency. So let's just talk about that for a second. Africa is a huge and diverse, extremely diverse continent of 54 recognized countries. And in that diversity, we have some extremely resource-rich countries and some extremely resource-poor countries. We have some very politically stable, economically stable, highly educated, high-tech countries that are very developed, and we have some totally lawless countries where you have warring factions who are controlling many parts of their country. So you have various ideologies, various religions. It is not a unified continent, nor is, most continents of anything of that magnitude is not going to be unified when it's so diverse. So if you're thinking of it as you would the euro or the European Union with the euro, and first of all, let's just say the euro's been around for 20 years, a little bit over 20 years now, and there's no evidence that that is a successful experiment. So to model it after the euro at this stage, I think, is a mistake in itself, right? But, so I don't know if there's an ability for Africa, when we say Africa, 54 countries, to come together and agree to a unified currency, because there are some countries that would be carrying other countries, and why would they want to do that? That just doesn't really make any sense from an economic standpoint. Now let's look at this idea of a resource-backed currency. So even if we just took one country that had a lot of resources in Africa and said, should it have a resource-backed currency? Sometimes we don't understand the distinction between a resource-backed currency and fiat currency. Currently, there is not a single country on the globe that has a commodity-backed, resource-backed, gold-backed currency. Every country on the planet has a fiat-based currency. So what is fiat? In a fancy term, it's not backed by any commodity. It is backed by the political and economic stability of a country and the demand of investment in that currency by other countries and its acceptability for use. That's it. And so let's talk about why the transition. So there are extreme limitations when you talk about a commodity-backed currency. If you have a commodity-backed currency, then you cannot issue more currency than you have commodity to support it. And in the case of not being gold-backed, so if it was gold-backed, those who had all the gold had all the currency, right? And those countries who could mine gold and control that mining were at a distinct advantage over countries that did not have gold, because they would have to then acquire it in some other means. And we saw the history of that. That's conquest and a whole bunch of other things that are, really underhanded, colonization and so forth. So there is no country, right? Because although it give you stability in terms of inflation, right? Because because you can no longer issue currency beyond your supply of commodity, you would have price stability probably forever, right? As long as you have the resource to back it, you can never issue more than you have. That's also its limitation. You are limited in terms of economic growth because you cannot increase your currency more than your supply. And you're like, well, why is that a problem? Because people want to consume more. That means they couldn't even consume more than the currency that's out there. The other issue is if you're not doing gold back, which means, and gold has very few uses, so you are willing to store that. If you back it by your natural resource that you also use to trade, every time you sell some of your supply of your natural resource, you are cutting into your money supply, because now you no longer have the natural resource to support the currency that has been issued, which means you would continuously be reducing your money supply as you reduce your natural resource. So you'd be shrinking your economy and not really making it stable. So that's not really a great idea. So I think the second part of the question was, how would that affect our economy? When he says our economy, I assume he means the U.S. economy. It would not affect the U.S. economy in any way, shape, or form unless it reduced the supply of natural resources that were being used to back the money supply. If it took that out of trade, then it would affect our economy, right? If it was backed by a commodity that we need and that we get from Africa, then it would impact us. But otherwise, it has no impact on us. The U.S. dollar is a fiat system backed again by political and economic systems of America. The interest rate that we're willing to pay, which means the demand that people are willing to hold the U.S. dollar as a store of wealth. I know that's kind of complicated economic stuff, but it wouldn't affect somebody else having a strong currency, right? Because we're not the number one currency in the world. I think we're like number 10, as a matter of fact. I'm pretty sure we're number 10 in terms of the value of a currency. So it doesn't even matter. But we still have the number one economy in the world. We have the largest economy in the world, but the U.S. dollar, in terms of trade value with other currencies in the world, I think, and Kuwait is number 1. We're number 10. And we're way ahead of China. China has the second largest economy, but we're ahead of China, right? And you would think the U.S. and China would be number 1 and 2 if we have the first and second largest economies. It doesn't matter. It doesn't stop the show here. It doesn't change our economy one bit. It wouldn't be, again, impactful because somebody's currency value increases or decreases. Would that affect our investments? Same situation. Our investments are in the value of a company. Depending on what type of investment you're talking about. If you're talking about foreign exchange currency, if you're doing Forex, then yeah, it changes. If you're talking about if you were doing some type of bond with that country, and then that would change. But if you're talking about stocks, unless you're investing in a foreign country there, and it improved their ability to increase its income, it has no effect whatsoever on American stocks. It has no, again, unless those companies are reliant upon the commodity which they backed it by, and that takes it out of the supply chain. So no effect whatsoever on U.S. economy, no effect whatsoever on your domestic investments. And I don't necessarily think that is a good strategy for the stronger countries in Africa to even consider a commodities-backed currency, because again, it limits their ability to grow and has no necessarily positive net effect in the long term for their economies. So I'd like to hear your thoughts on it. Please keep the questions coming. Please like, share, subscribe, and I'll see you next Tuesday.